The Central Bank of Nigeria has directed a post-note debit restriction on all bank accounts without a bank verification number and national identification number effective April 2024. This measure effectively freezes the funds in the account, rendering it inaccessible for the duration of the restriction. The CBN's directive is contained in a circular issued by the Apex Bank and sent to all deposit money banks earlier today. The central bank also stated that all the BVN or NIN attached to and or associated with all accounts, well, it must be electronically revalidated by January 31, 2024. Post-note debit is a term used to describe a restriction imposed by banks on specific account, preventing customers from making withdrawals, transfer, or any other debit from their account. Away from there now, Nigeria's 27.5 trillion naira Renew Hope budget for 2024 has been presented to the public. The fiscal authorities made the presentation hours after it was delivered to a joint session of the National Assembly by the President. They described the budget as realistic and implementable with more focus on revenue than spending. Lara Fulanyo reports.
A public presentation of the 27.5 trillion naira renewed hope budget for 2024. This is coming shortly after the proposed expenditure plan was laid before the legislature. The fiscal authorities say the figures contained therein are realistic and the document implementable. This is against the backdrop of the strategy being adopted this time around, which is alternative revenue sourcing rather than borrowing to fund the expenditure.
This budget is based on assumptions which are realistic. It is based on projections which I think the average person would say are reasonable. So therefore, it is something that we can expect to be successfully implemented.
They believe a lower deficit from what obtained last year shows a huge direction change from limitless borrowing to better revenue generation and expenditure management. The focus is on boosting the tax to GDP ratio from below 10% to 17% in a few years, a target that must be met to cut down on borrowing.
The projected level of deficit is partly attributable to the proposed salary review of federal workers, for which provision has been made, increased pension obligations, and increasing interest rates, which have caused higher debt service obligation.
We expect that in the course of 2024, as some of the policies begin to come to fruition, we may indeed have need to come back with a supplementary budget to reflect the full scale of the ambitions of the new administration.
The renewed hope budget for 2024 has a target of job and wealth creation, macroeconomic stability, poverty reduction, improved access to social security and human capital amongst others. Education, health and security are some of the sectors with the highest capital votes. Lara Fulanyo, TVC News, Abuja.
A group of experts converge on Lagos to discuss and chart a way forward for the economic revival of Nigeria. The meeting, which was put together by the Nanyang Technological University, Singapore, and NTU SBF Center for African Studies, attracted key economists from Nigeria and abroad to discuss the need to restore the economy to the path of growth. Details in this report.
Back to growth. Priority agenda for the economic revival of Nigeria was the theme of this gathering, a clarion call to set priority agenda for the revitalization of Nigeria's economy by engaging in targeted policies for the growth and development of the economy. The discussion kicked off with an emphasis on the urgent need to establish a priority agenda for Nigeria's economic development.
There are four critical factors, in our opinion, that are likely to determine the economic performance of Nigeria over the next 10 years. Those would be price of oil, fiscal stability, infrastructure, and investor confidence. Although there is very little Nigeria can do about the global oil prices, it can certainly take steps to improve fiscal stability, improve infrastructure, and restore investor confidence.
What we're all waiting for is additional articulation of policies to increase local production, drive inflation, expand the skill base and the capacity we have to produce locally so that we actually start growing the economy again.
One of the key points raised during the meeting was the need for the government to focus on diversifying Nigeria's economy. It was widely acknowledged that the over-reliance on oil revenues had exposed the country's vulnerability to global oil prices fluctuations, while emphasizing on the need to stimulate growth in non-oil sectors such as agriculture, manufacturing, and technology for economic resilience and sustainability.
If population is growing by 2.5%, and by the way, 2.5% is the lower estimate of population growth. Nigeria's population numbers, depending on who you believe, grow between 2.5 and 3.2%. So the mean number there looks like about 3%. So you cannot be doing half your population growth in food production growth and not expect to run into some very, very serious headwind.
The policies are there. The policies are world-class. The governance system is there. We are well structured from a governance standpoint. How do we use that system to meet the needs of those people is where we still fail or where we are struggling with, regardless of what political party or dispensation is in place.
Key areas of recommendations at this forum includes diversification of the economy, domestic resource mobilization, the need to create favorable business environment, enhance access to credit, and investment in human capital development.
Let's take a look at the equities trading today as market sentiments were bullish today. As trading recorded massive gains, causing the all-share index of the NGX to appreciate by 0.08%. Unity Bank PLC, Naimet International Pharmaceuticals, as well as Ikeja Hotel, topped the table of listed companies that appreciated the most in price that ended the month of November, followed by Omatech Ventures PLC, then Thomas Wyatt Nigeria PLC. Suno Assurance Nigeria led the list of losers, trailed by UAC of Nigeria PLC, then MC Nichols PLC, Cadbury Nigeria, and Royal Exchange PLC. And so equities market globally now, Asian shares started last month of the year on a cautious note after recent strong gains. The growing expectations that Europe and the US are poised to cut rates should help ease pressure on local currencies and central banks. MSCI's Broadex Index of Asia Pacific shares outside Japan fell by 0.5% after a surge of 7.3% last month, the most since January. Japan's Nikkei was flat, having also jumped 8.5% in November, in the best month in 3 years. Chinese blue chips dropped by 0.6% and Hong Kong Hang Seng Index fell 0.4%. The dollar index hovered near a 5-session high at 103.28 cents against its pairs, drawing some support from a sliding euro overnight. That came after a staggering loss of 3% for November, the worst in a year, while euro rose about 0.2% to $1.09 after tumbling 0.7% overnight to a one-week low of $1.08. And crude oil prices extended losses today and looked set for a 6th straight week of declines as voluntary oil output cuts agreed by OPEC Plus producers fell short of market expectations. U.S. West Texas Intermediate crude fell to sell at $75.92 per barrel with a price decline of 0.05%. Brent crude futures also experienced a downward price margin of 0.25%, selling at $80.66 per barrel. Bonnet Light recorded downward price review of 1.98%, selling at $80.18 per barrel. And for the OPEC basket, crude oil dealers are offering $83.89 per barrel with an uptick of 0.59%.